3 weeks ago, I was in Cyprus at the eToro Popular Investor Summit, and I was celebrated for my 10th year on eToro. But today, this is not what we want to talk about. There is something more important to talk about. Why am I losing so much money? In the last 3 months, my portfolio is down nearly 20%. And when I was in Cyprus, everyone was talking, okay, how are you doing this year? I said I was flat. But then 1 week later, I'm in Greece now. I'm on the island of Aegina, and that day, my portfolio, I think, fell by 5%. I'm back home, I'm now down 20%. If you look at my performance this year, at some point in August, I was outperforming the market. I was having a good year, but September came, October, November, and I'm down. So today we have to talk about what's happening. What is this big one mistake I made? Actually, to tell you, I did not make any mistake. This is what happens as an investor. You invest, especially if you have a concentrated portfolio like mine. There are some points where you invest, all of your investments are going to go down and you cannot do anything about it. It's like you have 10 coins. There is the time when you flip and 8 of them go tails. The probability of it happening is low, but it happens. And this is what is happening to my portfolio right now. And it is not me trying to defend myself, telling you that the long term will do well. It is because of these companies. So which company has the most effect on my portfolio? It is Wise, my largest position. Wise is down this year. It's just pure mathematics. If Wise is down 20% this year and it is 25% of my portfolio, of course, a huge portion of my portfolio is going to be down. But if we look at the fundamentals of Wise, the earnings of the company has been increasing. They have been making more and more deals with banks, financial institutions. Now 5% of the total transactions on Wise take place on the Wise platform. They want that to be 10% in the short term and 50% in the long term. Probably they are going to have new deals coming soon. So you have to think about where Wise is going to be 20 years from now and how certain is it that they're going to go there. And for a company like Wise, with little competition, I know they have competition when it comes to individuals sending money, but when it comes to making these deals with different financial institutions, making deals with banks to transfer money internationally, they have a moat. And the more volume they have, the stronger the moat is going to be. This is what people don't understand about Wise. What matters the most is volume, not really the take rate. The take rate going down is nothing. It is going to happen. It is inevitable. But as long as the volume increases, as long as they become an important component of the financial system, Wise is going to win. And it's not just Wise. Celsius is down. Celsius is a wonderful company. But the stock price this year, I think at some point was up over nearly 200%. Of course, at some point there's going to be a correction. But the beat earnings, the market was unhappy about it. It is okay, you're going to invest, there are always going to be corrections, but once again the question, 20 years from now, will more people be drinking Celsius than today? I think yes. And it's not just Celsius, it's the Alani Nu that they acquired, being distributed by Pepsi as from the 1st of December. We have not yet seen this on the income statement, on the financial statements. The Alani Nu incorporated with Pepsi. Not yet. All of this is to come. So there are better days ahead. The stock is down, I'm not worried. Of course, there are some companies in my portfolio underperforming, fundamentals underperforming. Evolution used to grow revenues, earnings by double digits each year, but now they cannot grow anymore because they are being proactive with regulations, ring fencing and everything. So they are slowing down on growth. Is this something we should be worried? I think yes, I'm worried about it, but not to the point that I cannot sleep at night. I really think that the evolution is having some issues, and it's not just evolution, it's Crocs. But once again, you have to think long term. Evolution, they cannot grow today, but in the long term, more people will be gambling online, more people will need those online casinos, and they will be using evolution. Unknowingly, it's going to be in the background. And the fact that evolution is seeking those regulations proactively means that they keep out the competitors. So they are strengthening the moat. Even if they are not making that much money, they are not growing that fast today, but they will be growing again in the future. We have to wait. Probably I should have waited before investing in evolution, but these are mistakes you're going to make. Same thing for Crocs. Crocs decided that they're going to preserve margins and they are not going to advertise that much because they want to be that luxurious brand that they are. It's a luxury product, Crocs. They have a strong brand. They don't want to sell to everybody. It's okay. And it's good that they are maintaining, preserving margins, sacrificing revenue growth this year. Of course, the market doesn't like that. The stock price will go down. But if you think about, let's say 3 years from now, we have the next cycle, will it recover? Will revenues be bigger than it is today? Of course, probably. If not 3 years, 5 years, it will happen eventually. And the stock price today trading at 5 times free cash flow, I believe it is massively undervalued. You will notice something that there are 2 types of companies in my portfolio. And it's something that may be the most important lesson I learned this year. They are compounders, Booking Holdings, Wise, Celsius, and then we have companies like Crocs. And Evolution maybe is both. Those companies like Crocs, they are undervalued, they are value stocks, but at some point you have to ask yourself the question, what happens next? Let's say today, Crocs trading at around $80 a share. And I believe that it can reach 160, so it doubles in value, let's say in 2 years. What do you do next? It is not a company that is going to grow revenues, earnings by 20% a year like Wise, or even 7-10% like Booking Holdings without the buying back of shares. It is not a compounder, so you have to ask yourself the question next, what do you do when you take profits? You have to take profits with companies like that. And I believe that it's better to be in the type of company that can compound. Because you look at Booking Holdings, the stock price is down, the company can repurchase shares. Even Crocs is repurchasing shares, even Lululemon is repurchasing shares, but the way that Booking Holdings does it is not like these two. Because Booking Holdings, the stock can still compound. If you think 10 years, 20 years from now, more people will be traveling than today, and these people will not be sleeping on the streets. They will be using Booking Holdings. Everything you're hearing about Google using travel AI, something like that, this is noise. Of course, it is going to affect Booking Holdings. But if you listen to past interviews of the CEO, Glenn Fogel, 1 year ago, he was already talking about the threat of Google. What Google released last week, he already mentioned that 1 year ago that this is coming. And he already mentioned how they are going to deal with it. And he's a great capital allocator. If you're investing, you're putting money, you're trusting other people with your money. And I trust the CEO, Glenn Fogel of Booking Holdings, Christo Klauman of Wise. These are great CEOs that I trust my money with them because I know they are great capital allocators. And this is something important about what I'm going to do now. Am I buying those stocks? Yes, I will buy those stocks because I want to be a great capital allocator. Investing business, this is great capital allocation. This is what I want to do. So these stocks, those companies are trading. All of the stocks in my portfolio except Meta and Apple are undervalued according to me. There are some undervalued by 50%. Most of them around 70-75%. And I'm always conservative. Of course, I should be buying those stocks. And I will be buying Wise. I bought more Wise. I bought more Booking Holdings. I bought more of, not Celsius. It's not that attractive yet. But I bought more of these companies. And I will be buying more of the local. I'm going to deposit more money into my account to buy those stocks. And there are some sacrifices that I have to make. There are some conferences I had to attend to actually, and I'll be missing them. I'll be missing my friend's wedding. It's okay. You have to make sacrifices. You have to invest. Your business needs you right now and you have to do it for it. It's like a baby. You have to take care of it. It's like me asking myself, would I invest in a CEO that does like that? Something like that? I should do the same. I have to put myself to the same level as these great CEOs. Speaking of great CEOs, Jeff Bezos was one of the greatest CEOs ever. He took Amazon from nothing to a multi-trillion-dollar company. And he did it with only one company. At some point, the stock price was down 90%, which means his wealth was down 90%. He did not sell everything and move to something else. No, he continued working on the company. The company wasn't profitable. He made it profitable. He continued working. He improved margins. When it was time to diversify into cloud computing, he did it. This is why Amazon is a success today. And this is why I still believe you need to have a concentrated portfolio if you can. If you want to be a full-time investor, if you have the time to analyze companies, please, this is what you need to do. You need to find, why not only one, like Jeff Bezos? It's because you don't have all the data that Jeff Bezos had. He had all the data and he had the power to change things when things are not working. You don't have that when you're investing in public companies. But you can choose a few CEOs that are doing that great job for you. And you give them your money, you wait 10, 20 years, you're happy. This is what investment is about. And you're not going to have 10 new companies to invest in every year. This year, I only invested in one new company, dLocal. And I will recommend you watch this video next while I'm investing in dLocal. Have a nice day and goodbye.